Hello and welcome to ATFX for our US CPI data release preview. CPI is now turning in to be the headline act of the week. We've already had last night the first testimony from Fed Chair Jerome Powell when he testified in front of the Senate Banking Committee. And unfortunately for most of us in the market, he didn't really give us too much to work with. He came out fairly neutral. So that was one of the big potentials for movements that we had in the market. It is a relatively quiet calendar week. We do have another testimony from the Fed chair tonight, but given what we saw last night, it doesn't feel like it's going to move the US rate indications and expectations too much. And therefore, what we're doing and what most of the investors in the market are looking for today is where the CPI comes out. Consumer Price Index, it is the #1 inflation indicator in the world, and most central banks are looking at this as their #1 indicator on where their inflation in their economy is going. Now, we do know we have the PC indicator in the US, and that is the Fed's favored indicator, but the CPI is right up there. We have to be honest, it is right up there. Now, the headline CPI number expected to come out for the month-on-month number is 0.1% increase, with the core, which kind of takes out some of those more volatile aspects of the CPI data. Core month-on-month coming in at 0.2%. This should bring in CPI for the year-on-year to 3.1%, which is still just outside that target range. Obviously, they want to get close to that 2%. And this is why we're seeing these moves in the US dollar and the US rate expectations, because we're really looking for that to get a little bit lower. Obviously, we're going to see some moves on the back of this. Anything that comes in higher should see those expectations that have crept in recently for rate cuts. Rate cuts now sitting at 73, 74% for September. They should creep back out again. Obviously, if we get a lower print, lower than that 0.1 or that 0.2, and certainly on that year on year, underneath 3% would be a real good indication that we will get those rate cuts earlier. We will see moves on the back of it, and we will see the dollar coming off. So looking at what we've got today, there will be some trading opportunities across the products. We're just going to look at a couple of the currencies and gold as well, which is obviously a heavily traded and it's moving a lot. Probably more bang for your buck in gold at the moment than some of the currencies. Okay, first thing that I had to bring up today, and it is, as you know, we're coming from the Australian ATFX office. We've just seen the RBNZ now kept rates steady, but has turned more dovish, which was a risk for the market. So we've seen the Kiwi dive here. It's moved back into the middle of the range, but with this chart, if we get a double whammy over the next couple of days, so we get a more dovish RBNZ and then stronger CPI, and therefore probably a more hawkish Fed, we could see this move extend even further in the Kiwi. So short-term support, or longer-term support, I should be saying, around about that 60 cents level. We've already seen a very good movement in the Kiwi today, but there could be even further trading opportunities as we move through the trading week. And Kiwi's already been probably our biggest mover now. Cable, as we know, has been trading in relatively tight ranges, but we are squeezing to those interesting levels. And those levels, we could see some fantastic trading opportunities. There we go. This is the daily chart. 127.82 at the moment. 129 is the resistance. 126 is probably support. If we get a weaker print from CPI, you could expect that 129 level to break, and that will challenge 130 and take us back into fresh ranges, even looking to challenge these highs that we saw around about 130, 150 not too long ago. Well, actually July 23. Probably the most interesting and probably the one that we're going to get the most bang for buck. Here's your dollar yen chart. We are sitting once again near record highs not seen for 38 years. We are in an uptrend, like there's no doubt about it. Interest rate differentials between the Fed and the Bank of Japan are still pointing to topside moves, but we've got a very concerned Bank of Japan. They have talked about intervention. We haven't seen it yet. It's been threats for another year. The Bank of Japan will be desperately hoping for a little bit of a negative number that comes through with this CPI. This actually happened back here in April when we saw intervention from Bank of Japan. The real bang for buck from this move was not actually those really sharp intervention moves. It was actually a change in the fundamentals where a CPI print came in a little bit lower and drove us down. But as you can see, we're back up near historic highs now. Bank of Japan really hoping for a lower print from CPI, so certainly underneath that 0.1. Negatives, they would absolutely love coming in under 3% on the year on year, they would absolutely love as well. Just have a look at things. Gold, one of the biggest trading commodities we've got at the moment. It has been in an uptrend, as we know, all of this year. Start of the year, we were down sort of at these levels, around about just underneath 2,000. We're up now. We hit another fresh record high, just underneath 2,450. We're not miles away from that. We could see this trend, this range break either side, to be honest. A lower print will take us through these highs fairly quickly. It will take us through 2,400 again and probably challenge those all-time highs. A stronger print will take us back down to challenge this short-term trend line support and probably take us down and open up the way for 2220 again. So absolute fantastic trading opportunities coming up. Given what we got from Fed Chair Jerome Powell, from his testimony last night, and what we're probably going to get tonight, if we do not get any further forward guidance from him, this CPI print Thursday in the New York trading session is crucial. Good luck with your trading. Thank you.